Oh, big man. Good evening. I'm fine. I hope you're also doing well. You pardon me, I've not been able to send you the audio concerning the risk management thing. You spoke to me about the last time. You see, I'll make it short for you. Yes. Uh, when you talk about risk management in forex trading, all has to do with capital protection. The money that you are trading with, that is what gives you the opportunity to trade in the forex market. So whatever steps that you make to protect that capital as you are trading to make more money on it, to make additional money on it, the steps that you put in place so that you wouldn't uh, lose all the capital or majority part of the capital in search for additional money on the forex market. So that is the risk management. And every trader has a way of managing risk, but at the end of it all, whether you choose A or B, whatever steps that you put in place to protect the capital that you are trading with, you are saying that your risk management is solid. So you see a pro trader, a professional trader trading, then not that they don't make losses, but they are able to stay in the game for long. A professional trader can deposit maybe a 200 USD in their account. They can flip that account maybe in a week or two to maybe 1000 USD. Not that they don't lose capital or they don't lose trade. It all has to do with the risk management. Another trader or a newbie or who does not understand risk management will also deposit same 200 USD. Maybe by the close of the week or even that very day, that trader will lose everything. So when we talk about risk management, it is the engine of forex trading. If you're a trader and you skip that important concept, then it means that it's going to be a problem. The reason is that we are not institutional traders. For institutional traders, they don't put stop loss on their trade. There are some traders who are against stop loss. Yes, that stop loss, they don't know anything about stop loss. They go into the market. Me, I'm not like that. I'm someone who is always with stop loss. Immediately I enter the market. Even before I enter market, I define my losses before I enter the market. So this market that I'm entering, I'm ready to lose 50 USD on maybe my 400 or maybe my 500 USD account. So you define your losses. So when you talk about risk management, that is all. Whatever trade that you are picking, you should be able to determine that this is how much I'm ready to give to the market, even before you lose it. That is all about risk management. So you have 300 USD account. Are you yourself, are you willing to lose 100 USD on a 300 USD account? Are you willing? If you are not willing, then you shouldn't enter more position, of which if the trade does not go well, you are going to lose 100 USD on the account. Sometimes we traders, as and when we are trading, we focus more on the profit, and it's a big time mistake. It's not you alone. To me too. I'm also a trader. I'm also a human being. We all make mistake along the way. But for you to be a disciplined trader, that is what is going to take you up there. Because all these big time traders that we see, either on social media or all those, that Forex has given them the breakthrough. And today they can just point a finger on a building that they are a project that they are working on, or maybe a car that they've been able to buy through Forex. They did it the hard way. They did it through discipline until Forex reward you and you take your trade up there. Like today, I was listening to one Nigeria guy. He said there was a time depositing 10 USD into account was a big money. Just 10, common 10 USD was a big money. He was very happy. His name is Michael FS Goat. Some time ago, 2 years ago, depositing just 10 USD into his account was a big money. He was very happy. Then it came to a point, depositing 100 USD into his account was a big money. He was very, very happy. Then it came to a time, depositing 1,000 USD into his account was a big money. You see the upgrading. Formerly it was 10 USD, then came to 100 USD, then came to 1,000 USD in that order. Then he said not too long ago, he said just this January or so, this year January, he deposited an amount of 20,000 USD in his account to trade. Not that he's trading to manage risk, or he went for full margin on his setup. He said I was listening to it a few minutes ago before recording this audio to you. He deposited that 20,000. He went full margin on that setup. So until Forex reward you that big time, you can't be doing that fucking shit. You pardon me for my choice of word. When Forex reward you that big time, when you look back into your bank account and you see that big money, that huge fund in your account, you can just make a withdrawal of maybe 5,000 USD or maybe 10,000 USD, put it to your account and say, no, this setup, where price has gotten to, I'm going full margin. If I lose, no problem. I'll get another money and deposit it there. Until Forex reward you, don't be a newbie and try to trade like Forex has given you that 1 million USD in your account. So losing 600 USD is nothing. Until Forex reward you, you are still a newbie. I'm telling you, I had opportunity, met one trader on is it a restaurant also? Yes, a restaurant at where I am. I didn't know he was a trader. A friend called me and I was talking to him concerning the forex market, and he heard the conversation and he realized I'm also a trader, and we were having that conversation, and that was what we were discussing until Forex reward you, until Forex gives you what it stands for, which is money at that highest level. You are still a newbie. No matter how long you have been trading, no matter your experience. So risk management is something that, my bro, I'm recording this audio. I pray that you play this over and over so that you get to understand whatever steps that you will make to protect the capital that you are trading with has to do with the risk management. So the trade that you are entering, that trade that you are picking, are you willing? Don't focus your attention on only the profits. There was a time I was listening to one forex trader in the US, and he was saying something. I said, this guy is crazy. How can you tell me that you are trading with 10,000 USD account? And with that 10,000 USD account that you are trading with, you are trading with 10,000 USD account. He said that is a strategy he has been using to trade, and he has been making good money from the market. He is trading with 10,000 USD account. So meaning on each trade, he risks 1,000 USD. So meaning with the 1,000 USD, he has 10 chances to trade. You listen to me. That was what he was telling his community. He has 10,000 USD account and he risked 1,000 USD on each trade. So with that 1,000 USD on that trade, it means that he has 10 chances or opportunities to trade on the forex market because of the risk, the amount of that 1,000 that he's risking on each trade. And you know his reward? When he entered the trade and he gets 250 USD to maybe 300, he will close the trade. You enter the market, you get 250 to 300 USD, he will close the trade. So he's entreating or encouraging his members in the community also to adopt that strategy because it works for him. And I also posted a comment on that platform that this is a poor risk management, because if I, Henry, any other trader can deposit maybe 200 USD or 300 USD and hold on to the trade and make that 200 USD profit from the market, or even 100 USD profit from the market, with that 300 USD account that I am trading with. When we talk about risk management, that trader, me or that trader, with either 200 USD or 300 USD or maybe 500 USD account trading, making 100 or 150 USD from that market on a trade, that trader has a proper risk management than what this guy is talking about. So Forex is not about the money that you get from the market. The market is risky. The Forex market is risky. So in as much as we are trading to make money, we do our best to protect the capital. So immediately you enter the market and you think of money and you enter many or so many positions. You enter positions that of which when the trade goes against you, you are not ready to or you are not ready to take that losses. Maybe you are trading with a 300 USD account. You've entered position when you have to add the total of your stops, your stop losses. It add up to maybe 100 USD or maybe 120 USD. Thinking that as you continue to remain in the trade and the trade goes well, you'll be sweeping maybe 200 to maybe 250 USD profit from the market with that entries. Forgetting that it is not always that the market can give you that reward. Sometimes you can do the best of the analysis, yesterday the market will go against you. You can do the best of the analysis, yesterday the market will go against you. It happens to all traders. If you're a trader and you don't lose, you are saying that you've never lost in the Forex market. It can happen that the whole week you may not encounter any loss within the week. It is normal. But you can't tell any other trader that with the whole year or maybe the whole month, you've not encountered any loss. It can happen that you may have a streak of wins throughout the week. That one is normal. But one way or the other, you will encounter some loss. So no matter how profitable you are, risk management is something that you cannot joke with. Last, when I saw your drawdown, I was very sad. I was very, very sad. And I know very well that if you would have put in proper risk management, this wouldn't have happened. So this is, I wish I would post this on the main platform so that each and every member on the platform can also have opportunity to learn from what I'm sharing with you, because risk management is something that is worrying many traders. Risk management, it is something that is worrying many traders, sometimes even myself. So until we become disciplined, until we become disciplined, we should forget. I'm telling you, this one I will not lie to you. I'm at the roadside. Until we become disciplined. For me, always you see me trading with a 0.01. Not that I'm afraid to lose. I've already defined, before I enter the market, I've already defined my losses. This is how much I'm ready to lose on the market. So if I'm entering the market, I'm ready to lose 100 USD. That is it. I won't go in for a trade of which I'm going to lose 200 USD or 300 USD. I'm not ready to, or I can't afford to lose that money on that trade. So I will not enter a position of which can cost me 300 USD on maybe my 1000 USD account or maybe my 800 USD account. I can't afford to lose that money. So whatever you do to protect the capital that you are trading with, that is all about the risk management, because it is that capital that you have in your account that is giving you the opportunity to trade in the market. And one interesting thing about this Forex market that I want to add it is that the more you trade, as you keep trading live, that is where you were able to master your skills. So whatever that you are going to do in the market, that is going to cost you to stay out of the market, be it losing your money because of poor risk management. What are you learning? Trading is just like a footballer on a field. Have you asked yourself why footballers hate sitting at the bench? Have you asked yourself why footballers hate sitting at the bench? The reason is that as they keep on sitting at the bench, they are not playing, they are not making mistakes of which they can correct themselves or improve their confidence. Because the more you play, that is where you continue to make mistake, improve on the mistake, then you become a better person. So it means that as you continue to play, you gain more experience. And as you continue to gain more experience, you build more confidence. You know how to handle yourself on the field to make wins for your team. So as you continue to trade, you blow your account, you stay out of the market for a week or two or a month. You are not getting funds to trade live. Always sitting at the back, watching what is happening. What experience are you gathering? What experience are you gathering? You are not gathering anything. You are just a spectator watching. So for you to be a good trader, capital protection is something you cannot joke with. If the trade is not going well, cut that loss. Sometimes we hold on to a losing trade. We hold on to the trade is not going well. You've seen that the thing is not going well. You are hoping in forex trading. Last I was listening to Levermore. He said in his one of his podcasts that I was listening to. One of his podcasts that I was listening to. Bro, you holding on to that losing trade, is going to cost your account. Cut the losses early. Then save that capital. Then when you have a better setup, then you use that capital to trade. Sometimes you hold on to the losing trade. Even when we are in profit, you don't hold on to that profit. You don't let the profit run in that long period. But when we are losing, we will hold on to the trade for long period and our account will be off. But when we are in profit, hitting maybe 50 US, 60 USD, boom, we close the trade. But when we are losing, you are losing 50 USD, 70 USD, 100 USD, 120 USD. You keep on holding on to the trade to the extent of blowing maybe a 600 USD account, 700 USD account, 1000 USD account, 2000 USD account. After all, it's that very day that you are trading happens to be the last day on the market that we are not going to trade anymore. Forex will not be no more. Forex existed before you were born. Forex existed before I was born. And we are going to die and forex will keep on existing. So if you go to the market today and it doesn't go well, close that trade. Close it and save that money for another setup. So this is what I have for you. I'm going to share this on the platform so that the members on the platform can also. I think I have to make a video on that on YouTube so that you will all learn on a similar tone. Yes, so that we all learn from it. Yes, we all learn from it. I thank you all for your attention. Bye bye.